The following content is brought to you with funding from the Universal Service Fund, USF, via its local digital content development initiative. Enjoy the show.
What's up, beautiful people? How you doing? Welcome to another episode of Money Talk with Prue. Hi, I'm Prue. On this channel, we talk about all things finance, and specifically that is personal finance and small business management. So if you are on your journey to financial freedom or just want to learn how to manage your small business effectively, then you are in the right place. Today, we're going to be looking at the topic of insurance. What is it? Do you need it? Can you live without it? And here to help us dive into that topic is Mr. Reuben Kamanga from Minet. He's the head of business there, and he's also the president of the Institute of Insurance in Malawi. Welcome to Money Talk with Prue.
Thank you very much.
Yes. So can you just give us a brief background of your career in insurance? How long have you been in it, and have you always been interested in insurance?
Thank you very much. It has been a long journey for me. I've been in this industry since 1999.
Okay.
Yeah, but I joined the classes then at MCA. It was tertiary from certificate level.
Okay.
And that's the way I started my career as an insurance practitioner.
Okay.
Then I proceeded up to UK, further studies. As I'm sitting here now, I'm a chartered insurer.
Okay.
And also working for Minet, as already alluded.
Yeah.
I'm the president of Insurance Institute of Malawi.
Okay.
That's a brief who I am.
That's incredible. 1999. That's 25 years in insurance.
Yes.
Okay. So tell us, insurance. What is insurance, and why is it considered a necessity in life?
Insurance is very important because we are talking about the risk transfer mechanism.
When you say risk transfer?
Yeah, risk transfer mechanism, you may have an asset. Maybe I'll take you to the basic one, which most people are aware of, the motor vehicle.
Yeah.
You find that you've got a motor vehicle. You purchase either through a loan, bank, or personal resources, maybe about 50 million. And the insurance will be there. You insure your car. What it means that in event of a loss, they have to compensate you. So you may bring your vehicle for worth 50 million. They will charge you around maybe 2 million or 3 million, depending on the rate that you have secured on the market. Then you pay that for the whole year. It's only annual premium. So anything happens within the period that you have covered, from a given example, from 1st January to 31st December 2025, if anything happens, there are two options. Either if there is a partial damages, the insurance company will repair your vehicle. If it is a total loss, which means it's beyond economical to repair that car, they will pay you 50 million less excess. So you can see, if you look at the 50 million and the 3 million that you have paid, and the insurance company is giving you around maybe 48, 47, depending on the policy excess, which means that you are able to repurchase the same car after the accident, if it is a total loss.
And then, like, why is it necessary? Because I may pay the 2 million, no accident. Isn't that just a loss on the 2 million?
You know, accidents is very difficult to determine.
Okay.
You may think this year it will be a good year for you, but it might not be a good year. So you don't need to take chances. That's why we are there, to prevent you for uncertainty. You may opt, okay, this is fine, this year I don't have an accident. But I mean, the end of the day, you never know. You don't plan. You know, you are moving on the roads. You're not the only one moving that road. If you had only one road for you, would have, okay, it's fine. But also there's mechanical problem on the vehicle. The brakes, you find that it's not only that people can hit you, but you find that those vehicles are also prone to accident on itself. Mechanical failure, you find that the brakes are not binding. What's going to happen? You end up hitting somebody's property. So also that also is taken into consideration, because as I'm talking about comprehensive, it also has the third-party liability. So if you are covered also in third-party liability, the same premium, they will also help you, because the 3 million you have paid on damage, the same premium also help you to repair other vehicles that you have hit on the road. So you can see the benefits are more than the option of not taking insurance.
Okay, so that's on the car thing. But insurance covers a wide range. As you are the president of the Institute of Insurance, you look at life insurance, you look at the car insurance and homeowners insurance. There's so many types of insurances. So which one is a necessity according to you? And because when we hear all these things, people feel overwhelmed and then they just don't do it. The only thing they do maybe is the car one, because there's that whole it's the law. Everybody needs to have at least the third-party insurance, but the rest is overlooked. So how do you advise that? How should people go about looking at all those other types of insurance?
Basically, I cannot single out which one is important. All of them, they are very important.
Okay.
Because I'll look at in terms of life insurance. I will go to our colleagues' personal lines, especially on medical health as well. I mean, you pay a little premium, but if you are sick, you go to the hospital, it's the same money that are gonna pay you. If you go to the hospital nowadays, you look at the bills, most of the bills are 5 million, 6 million. Just to meet a doctor, you find that the consultation fee is around 200, and you're only paying in a month 24,000 or 35,000. I mean, those are the benefits that you have. So if you go to life, I mean, anything can happen in life. I mean, the challenge of life is that you are now talking about dependence. Because if you are gone, I mean, you're putting your lives of your family in a predicament, because maybe you are the source of income. So you shouldn't want people to be crying for the first month or 3 months that you have died. Let people have some comfort. So you find that you've got a group life which their company has taken in event of death, which means the family will be paid depending on the agreement on your contract, maybe 3 years or 4 years of annual earnings. They will pay the family. So at least for the 5 years, they'll still be mourning, but at least they'll have something to at least to lean on in eventuality that you're not there. So if you look at house owners, you've got items in their houses, the house itself. What happened if their house is insured about 400 million and today the house is gone because of fire? You know, fire nowadays can come from different sources. The house is gone and you are retired. Where are you going to get the money to rebuild that house? It's become a challenge. So insurance will come in, and the house owners, especially on property on fire, the rate are two things. You're talking about a house of 500 million, but you'll be paying premium maybe around 2 million. And the insurance will come and pay you maybe 380 million for you to have that house back. I mean, those are the benefits. So people, all of them is the risk of mechanism that you are able to transfer risk that you cannot afford. Because saving money in eventuality is not easy. But insurance gives you the comfort that in event that there is any loss, you know that you have got a partner. The partner is the one that comes in to help you. So they will pay you total amount and less excess, and you're able to rebuild the house. If it was a partial losses, they will just repair the house and make sure that your life moves on. So the contribution that you're seeing, people may see it is a very punitive, but it's too little based on the benefit that we're going to get. So in nutshell, all of this, there's no one which is special among the insurance. All of them, they're special because it will cushion you in eventualities.
Okay. So now when it comes to purchasing this insurance, there's the insurance providers themselves, and then there's people like you, the brokers. Where do you come in? How do I assess whether I need a broker or not? And is it less expensive, less pricey if I go direct to the insurer, or if I use a broker?
That one is a very difficult one, but I'll take because I've invited, because I'll take a side, but that's a way of life, because I'm in a broking industry. For me, I mean, it's better to go to somebody who is a professional, because broker is a qualified, is a middleman that will assist, because the broker, you should understand, broker is not recruited by the client. That's one thing that people don't understand. When you become a broker, you deal with an insurance company. Your boss is not the client. Your boss is the insurance company. So that is the first one which people are not aware. And the client has got no cost to pay to the broker.
So meaning whatever quotation I would have gotten direct from the insurer is the same that will come to me as a broker.
But the broker will be just there to guide you
Okay.
Because he has got time to analyze your portfolio. Looking at your portfolio, say, okay, this is your portfolio. This is the best way we can handle it. Then we take to insurance company based on the same quotation. And eventually there's a claim, you know, you go direct to the insurer. They are busy most of the time. But broker will be the one that will take you all through the process. All the documentation are required. The broker will assemble it on your behalf. Despite not you the one paying the broker, because broker is not paid by the client, it's paid by the insurance company. So, but we always work in the best of interest of our clients. But though our master is an insurance company. But for us it's a relationship that we've built the way business are, because in insurance we call Uberima Fide, which means utmost good faith. We rely on trust. So that what broker is providing is what is needed from the insurance company point of view. So we gathered all the information and present with your interest, but also follow the policy procedure. What was issued, what is supposed to be expected. And a qualified broker will tell you before even the loss that this one, you will get this amount of money because you are aligned to daily operations. So you are able to know this is the best way. But in a nutshell, the best is to go for a broker because he's the one that is linking the two of you. And the broker will always remind you when the renewals are closer. So you can make some changes. You have long time to discuss with the broker as opposed to an insurer. So the broker is well technical expertise. He has got a core inner circle of the knowledge. So for me, despite that being a broker, because I've worked as an insurer as well, so I know both sides. I never started as a broker, I started as an insurer. So I have got all the benefits being going direct and going through a broker. But to be honest, the broker is the best way to go.
All right. So now when it comes to the claims process, what is the procedure like? Because there have been other stories in the news that, you know, you pay your insurance premiums, but when it comes for you to claim, the insurance people, like, they just give you the runaround, like they don't want to give you the money. What is the claim process supposed to look like, and how, in what period of time is somebody supposed to get their claim settled?
There is no any insurance company that can run away from paying the claims because we are a regulated industry. Maybe people, they don't know. Any insurance company is regulated by RBM, Reserve Bank of Malawi. And they have got period that are put in place. But maybe, as I said, when you go direct, you may miss some documentation that are required. It depends with the nature of the claim. But I will take you basically for motor and the property, which are similar in terms of documentation. When a claim happens, you notify the broker or the insurer direct. If you're gone direct, you notify the one that you're dealing with that have got an accident. If you're a broker, you go through to your broker, you write an email or even a phone call that you've got an accident. Then what will happen is that you need to fill a claim form. Now, the claiming form are not universal. So each and every insurance company, if you go to Britam, they've got their own claim form. If you go to Nico, they've got their own. Basically, what is there, they change is the logo. But the information are required are the same. So you fill in terms of a motor, then we'll ask you to go and get 2 replacement quotations. So the garage will look at your vehicle or your property. If it's repairable, they will give you the quotation to repair the vehicle. If it is not, they will write what we call technical report, which will testify that this vehicle, the way I've looked at it, it cannot be repaired. So in that situation, which means that they will give you a technical report, then you attach the police report, because any big accident, you need to report to the police. So you need to have a police report, and the person who was driving the vehicle at the material time, he has got a driving license. It should be valid. So you attach the claim form, 2 replacement quotation from different garages, and the police report together with sometimes with a blue book, which our colleagues, they call it white book, is the blue book. Or sometimes they want to do some quantification to make sure that the value of the vehicle was correct at the time of the loss. So if you give all those documentation, surely a discharge will be issued if it is a total loss. If it is a repair authorization will be issued within 7 days. But when it comes to payment, it's 14 days. And those things are documented. And if any insurance is not meeting those requirements, there are penalties which Reserve Bank have put in place. So you are heavily penalized on that one. But we are moving close to perfection, and most insurance companies, I can vividly support them. They are meeting the the obligation of the RBM requirements. But the challenge is that slow documentation coming from the clients themselves. Because today you come with a claim form, it will take 2 weeks to come with a quotation, it will take another month to come with a police report. So you are forgetting that you are the ones that you have delayed the documentation and you want to push the blame to the insurance company, which is not correct. So in real terms is that the client himself has to be equipped. The broker will tell you what you're supposed to bring. And if you put all those together, I don't think it can take a month. Because if a repair authorization 7 days, it will be done. Payment 7 days for 14 days upon discharge, because you have to count the date you sign the discharge. So if you sign, but you remove weekends, people don't work weekends. So if you sign on Monday, which means up to Friday is 5 days. Then you take another 14 days, then the check is come. But most of the company now, as long as they've got funds available, they don't wait for 14 days. Why? Because that has been already processed. So we are moving away from that. It's just maybe an awareness. And I'm privileged that most RBM together with the EAM and other stakeholders, they're putting an awareness so that people should understand the procedure, how they can go about it. So we are striving to make sure that all the documentation should be in place.
Okay, so when I'm insuring my car or my house, how do I know how much to cover, how much value that property is? Is it the same amount that I have spent in building it, or the amount that I paid when buying the car? Or how do you help people to come up with the right value to insure the property?
Okay. Thank you very much. We have different models, but for motor vehicle, especially from the dealers, are straightforward. You look at the replacement value of the new vehicle that you at current now. I'll give an example. If a Prado today is now 300 million TXL, and you've got a Prado of 2 years old, so you go to Toyota Malawi, you get the price, or Nissan, whichever, of that similar vehicle. Then you depreciate it with the number of years the vehicle has been running for you to come up with accident market value. Because for motor vehicle, they depreciate. So you may not insure at the value that you purchased the vehicle. But sometimes with the kwacha is not stable in terms of dollar. Most of the vehicle are pegged in dollars. So you find that the price has gone high, so you find that you'll be lacking behind. So make sure that you should be aligning yourself to the motor dealers to get the correct amount at the current and depreciate with the number of years that the vehicle has been running, looking at the mileage as well that it has been running. So you come out pre-accident market value. That's the value that you're insuring your vehicle. So in event of a loss, there will be no average clause because you're aligning yourself. But for property, in terms of houses, every 3 years you need to do evaluation, because houses are not insured on the sums insured that you built the house. What you're going to replace if there's a loss. You may have a house of, you look here, the house maybe looks odd, it's about maybe 15 years, and you say this house now is worth 10 million. It's not the house that you're saying there. What you're going to rebuild in event of the loss
is what
you are supposed to. So we call it restatement value. Meaning that because the house is different from motor vehicle. I said motor depreciates, but the house appreciates. So what it means that you need to make sure that you need new iron sheets, you need new bricks. So that's why you cannot insure it on the previous value. So you need to be every 3 years, you have to call for the valuer to do the valuation to give you a collective amount. However, sometimes valuation is very expensive. You look at the inflation, how it's going, and looking at yourself, the things, the material, when you're purchasing, you can see maybe the house need to be adjusted. So sometimes you cannot put the rule that I need to go to the value because they're very expensive. They will charge you based on the current sums insured, and you pay a percentage. Most people run away from that. So you can just adjust, okay, I'll put my value now. If it was 2 years ago, it was 50 million. Looking at the inflation, the way the kwacha is floating, you can say, I'll put my house at 200 million. So which means you are closer to replacement value. So those are the areas that you need to be skeptical in terms of insurance. You have to make sure that the moment you live without updating the value, it attracts average. So what it means that they will take the 2 years value that you put, which was 10 million times the loss and divide the collected amount, which should be around maybe 150 million. The difference is what they're going to pay you. So you lose out because you haven't insured collected. The same way to motor vehicle. If you underinsure your vehicle, because you pay loss premium, but when it comes to partial losses, they apply average. But when it comes to total loss, because the insurance company will not contribute when you're going to replace the new vehicle. They will give you, if you insure your vehicle, 5 million, but knowing that your vehicle is about 10 million, they'll just give 5 million less excess. So you get maybe 4.2, depending the excess that I've applied, which means if you want to replace that car, you pay 10 million. You're going to pay yourself the difference. But when it comes to repairs, they'll apply average because the pricing where they're going to buy, it will be more expensive. So, which means you are underinsured, you are benefiting, because the bottom line of insurance, you should not benefit. The beauty is that they should put you at the same position you were before the loss. Insurance is not about benefit. Insurance is to bring you back the same position you were before the loss. Meaning that if your vehicle today, if you're building a house, if you want to build this house, is today the house is worth 10 million, they have to build the house of worth 10 million. They cannot build a house of 50 million, but that would be a benefit. So insurance is just to cover the risk, to put you back you were before the loss. But for the houses, it has to be restatement because the material you're using are not second-hand. It's more expensive. So that's the bottom line.
So what happens, let's say my vehicle is 10 million. And I decide to insure it for 20 million. Will you say no? Will the insurer say no?
As a broker competent like me, I'll say no. Because you are...
But I'm going to pay a higher premium to the insurance company. So isn't that a gain for them?
Yeah, but the challenge is that when it comes to a total loss, or they will pay you based on the market price, not the one that you've inflated. Remember, when I started the program, I said insurance is your minimum fee at most good faith.
Yes.
Which means that if you are overpricing, they will not pay you because of overpricing. They have to put you what is worth it. So even if you take I'll give an example, your laptop is worth 5 million and you're insuring 10 million, they will not give you 10 million.
In the event of a theft or what?
They will not pay you because they will go to the shop, they'll say this Apple is worth 5 million. And if you look at the number of years the Apple we have been with the Apple, maybe 1 year, they'll take maybe 10% out of it, maybe wear and tear 5%. You find that maybe 4.2, 4.3. So if you are insuring over, that's theft, which means you want to benefit. As I said, insurance is not for you to benefit.
But how is it theft if the premium I pay you is based on the 10 million value that I gave you and not the 5 million?
Yeah, because you are deceiving it's just unfortunate. This brings back to our colleagues in Europe. Because in Europe, you don't tell them the value of your property that you want to insure. Even motor vehicle, you don't tell them. They have got the system where by the moment they will just put that brand in the system, they will tell you the value of your computer or your vehicle or your house. But in Africa, especially we Malawians, we don't have that system. So we believe in you that telling us the truth. But when there's a loss, we need to validate. Is it correct or not? So the only challenge, that's why maybe people you're saying, insurance people you're stealing, because we validate at the time of the loss. Mostly. But some of the competent brokers, whatever, they will tell you, for me looking at, I'll give an example, if you come up with any type of a car, small ones, the Japanese one, okay, maybe I'll put Demio. Demio, if you look at landed now, because of the expertise that I have, they are between 12, the new Demio, 12 to 13. And if somebody brings me 25, I'll say, no, I cannot take this one because I know the market. This one, it can't go 25 million because I can see if today Vox landed, you can see it's around 19 to 20. Somebody's bringing at 50 or said, no, there's something that you want to play around because if you go to Nagoya, you find that the Vox already landed is 19. Why do you want to show a 50? Which means there's something that you want to take away. But you, at the end of the day, you may not even succeed. You may insure at 50, but you still get 20 million success because that's a collective value of a Toyota Vauxhall landed as of today. So that's why we said, let the expertise help you. But I would love going forward, we could have the system. This also will help people to say insurance are thieves because the system will solve all these problems that we're meeting. Because validation of the loss is like somebody who has got a funeral. now questioning that person already dead because somebody has been suffered.
Yes.
Then you're telling now, okay, sorry, I've suffered, but this suffering you only get 5 million. But that's wrong. But at the end of the day, that's we don't have much mechanism. We have to validate at the time of the loss. But some of the brokers, we are trying to validate if you've got people that can do the right thing. It has been, and most people have benefited.
Okay. Yeah. And when you say less excess, what is that? What is excess? Okay,
excess is in any claim. This is a borrowed. You know, these policies, insurance is not generated from here. It's generated from Europe. So what they are trying to do is that excess is the amount of money imposed to the client, the insured. When there's a loss, if I give you, there's a loss of maybe 700. All right, that's the total quantification. They said, okay, we're going to repair this vehicle at 700. Now they want you in future to prevent having losses. If the accident, you are the one causing the accident whatsoever, you feel the pinch that if there's a loss, I'll contribute. So they will charge you 10%. So you find that, okay, 70,000 you have to pay yourself. What they're trying to generate is not punishing you, but they want you to be careful that in event of a loss, I'll still have to contribute something. So they will take 70,000, you pay yourself to the garage, and the balance, the insurance company will pay. So the excess is in short form, is the amount payable by the insured before the insurer finalizes the total bill. So the total bill less excess is that one. So if you've got a motor vehicle, it's a total loss. They'll charge you 10%, maybe 20 million. They'll move for maybe 2 million. Then you come 18. So what you get is 18, not 20 million. What the 2 million said, you feel the pinch because you're going to buy that car at 20 million. So you are putting back yourself 22 million to come out 20. So next time when you're driving, you'll be cautious. I'm also contributing. So that's excess. It gives you a wake-up call that in any event of loss or total loss, I have to contribute. That's an excess.
Okay. So it's like a shortfall when it comes to the medical thing.
It's similar to that.
Okay.
Similar to that.
And does that excess increase? Like the more you submit claims?
No, it's a standard one. It's a standard one. But if you're doing more claims, the rate that you've been given this year, if you're on an annual basis, sometimes you may have one claim, total loss, which means I've wiped all the premium. Sometimes you may have partial losses or 3 within the period of 1 year. So if your occurrence of accident are too many, which means if you're getting 5% rate, come next year, the insurer may increase your rate maybe to 7%, because looking at your history, you have been causing a lot of accidents. So which means the fund, remember, this is a fund. The reason why you're paying little premium is not that we are not looking at your own vehicle, which means it's a pooling of risk. So we take all the vehicles that you see in town that are compressive, whatever third party, pull them together. So the fund that are there is huge. We invest. So when there's an accident, we are calling those funds to repair your vehicle. So which means that we look at the scenario, you're the only one that you're taking from the fund. So which means you are depleting the fund. So next year we increase your premium so that the fund should be grown based on your accident. So if you don't, but previously where you're coming, people are getting discount. But because of the competition now, and it's a soft market, it's become a challenge. There are so many players on the market. So the excess, the rates which are offered now, they're standardized. While in a hard market is where you can charge higher because there are no many players. So we have so many players at the moment. So the rate, because of the competition, you can't charge much. So why should we do that? Then we become the rates which are minimal. So everyone is getting the same. So there's very little that the insurers can give you back in terms of a discount because of the competition we have on the market. But previously, 1999, 90, we had those premium where we could come from 10% up to 6% with our NCD discount because you're not having accident. But those ones were wiped out because of the soft market that we are having now.
All right. So how often should I review my policy? Like when I buy it 1st January, am I okay till December, or am I supposed to regularly get an update on whether I'm still fully covered or not?
It depends, especially when there's a devaluation.
Okay. Yes.
When there's a devaluation, which means our kwacha is losing value, so which means the value that you're insuring your car now, it will not be the same.
Of
like
course.
now, the dollar, if you find that the dollar now is more expensive and you want to import a car, you may not able to do if you look at the value that you have.
Okay.
So you need to look at the inflation, how it is going, and the market rating. Then if those things shaped up always when the devaluation, the kwacha loses value.
Yeah.
At the end of the day, we are Malawians, we depend on dollar. So most of our things, they are pegged outside. Despite that we are trading locally, but the influence are those major currencies, because that's the one determining you to replace your stuff. So if the machinery, how much are you going to pay if you want to take from outside the country, importing? So those are the facts that you need to look. So annually is the best option to review your, but also if there's any devaluation, we'll always come forward to tell you, like the 44% that we had.
Yes.
We'll always write to you, so okay, this is the situation now on the market. Can you review it and you put your value in the correct manner so that in the event of a loss, you shouldn't suffer.
Yeah. Okay. All right. Thank you so much. Any last advice for anybody who thinks it's okay to live without insurance? They have not had any accidents or any sicknesses during the year. Their life is going just fine. How do you convince them that they still need insurance?
From me point of view, it's very important to have both. Because we are talking about eventuality here, and in terms of risk transfer mechanism. And for you to have insurance, we call, you're buying a peace of mind. You are assured that in event of a loss, what I paid in January, I'll be getting more than that. It's like someone is putting money for you, waiting for you to have an accident, because it has to be an accident. It's not just given away. So for me to have a peace of mind, that's the solution. And we are encouraging all my fellow Malawians here. I think the best way, let's take insurance as a priority, because it has helped a lot in terms of hospital bills. You can go to our colleagues, the ones that are offering, because they are two different. We have got other people are offering on health insurance.
Yes.
Then they've got life companies. Our colleagues are offering life insurance companies. There are also pensions that are dealing with investment. We also have general insurance where we're offering solution in terms of property or anything that you want to insure, and the price, I can assure you, is very minimal. But also if you've got issues that you want to know more, we are available, and our regulator is very open. Reserve Bank, if you've got any issue that you're not getting any help, knock to their door, and they always come to us to perfect those things. So otherwise, this is our market, let's embrace it, and we are willing to assist the nation as we are contributing to the growth of this nation.
Okay, thank you so much.
Thank you.
There you have it, people. That's our discussion on insurance. So we've talked a lot. We've talked about why you need insurance, how to get insurance, why you need a broker. So if you stay to the end, thank you so much. I ask you to put any questions that you have regarding insurance in the comment section. And if you have any other questions, you can also email us to the email address that's in the description box. Don't forget to subscribe to this channel, to share it, and to like this video so that we can have a Malawi that is financially literate. From me, Prudence, from Money Talk with Prue. Till next time, bye.